Okay, good evening. So tonight we'll be looking at personal income tax of partners in partnership business. And for personal income tax of partners in partnership business, their assessment is almost the same as how we've been assessing others. Just that, and we know that the income of partnership is to be shared between the partners. The income of a partnership business is to be shared between the partners. So what do? We first need to calculate what is the distributable income of the partnership business. What is the distributable income of the partnership business? And to calculate the distributable income of the partnership business, we'll take the net profit of the business, we'll adjust it for tax purpose. That is, we'll add back the disallowable expenses, we'll less any allowable expense omitted, the normal way we go about it.
Okay.
Then having done that, we are preparing the normal partnership account. We are preparing the normal partnership account. I mean, for financial accounting purpose, we used to split the expenses of the partnership business into two. Expenses with third parties, those ones are the ones that go into the SOPL. But expenses with the partners, like partner salary, interest on capital, we take those ones to the appropriation account. However, for tax purpose, all of the expenses, be it with third party or the partners, we take it all to the SOPL. That is, if they haven't deducted the interest on capital, partner salary, and so on from the net profit, we'll also deduct it. We'll deduct it. Their leave allowances, all of those things, we'll deduct it. Then after adjusting for the profit, taking cognizance of the partners' expenses also with the business, we now go ahead to okay, after doing all of that, we go ahead to get our adjusted profit. After getting adjusted profit, we add balancing charge, we less balancing allowance, we less capital allowance, and we get what should be our distributable income. That distributable income is what we now share. To the partners in the partnership business according to their profit sharing ratio. And after doing that, we can now proceed with calculating what this thing should be, what the taxes of each partner should be. Then in calculating what the taxes of each partner should be, we'll now be taking all of the income of the partners, like partner salary, interest on loan, interest on capital, share of the distributable profit. Then, if they have any other income aside from the partnership business, we also add it, be it end income or an end income. Then we less their tax exempt, we less the consolidated relief allowance, and we arrive at the chargeable profit, which is subject to tax.
Tax.
So that's basically what we have on taxation of partners in partnership business. The only difference in here is that we have to first adjust the partnership profit to ensure it captures all of the expenses with the partners and we correct the disallowable expenses and allowable expense and non-taxable income. Is it clear?
Yes, sir.
So without wasting our time, we'll just look at few questions and we'll call it a time. So will you read this question?
Olu
Oludemi, Chukwu, and
Oludemi
Abdullah.
Chukwu and Abdullahi are partners in the firm Oludemi and Co. for a very long time. The firm makes up accounts up to 30th June of every year. Below are the extract from the profit and loss account for the year. Okay. Year ended 30th June 2016. Net profit for the year.
No, leave those ones. Go to the additional information.
Additional information. Okay, salaries were paid for partners as follows: Oluremi, Chukwu, and Abdullahi. Each of the partners is married with 6 children. All of their children are still at school. All of their children are still of school age. C. Oluremi and Abdullahi made loans to the partnership interest on which was paid as follows: Oludemi 30 million, Abdullahi 35. Each of the partners has an aged parent whom they maintain during the accounting year. And E. Please help me scroll it up small. E. The partners have insurance policy on their lives, and the premiums for the current year are Oludemi Chukwu Abdullahi 30, 32, 25. The partners are entitled to 5% of capital contributed by them. The balance on their capital account are as follows: Oludemi Chukwu and Abdullahi. Included in the repairs and maintenance is the sum of 45 million which was spent on the repairs of Oludemi's mother's house. EH, capital allowance and balancing allowance were, help me scroll up, were capital allowance 200,000. J, included in miscellaneous expenses are interest on capital, interest on loan, and salaries of partners. K, partners share profit in the following ratio: Oludemi Chukwu and Abdullahi 3:1. You are required to calculate the taxable income of each partner for 2017 year of assessment.
Okay, thank you very much for that submission. We have Oludemi, Chukwu, and Abdullah. So we have Oludemi, Chukwu, and Abdullah. So the first thing is computation of distributable profit. Or 2017 year of assessment, or you can just say for 2016 accounting year, for the year ended okay, 30 June 2016. So we have net profit. What's the net profit? 1.2 million. And they said that was after charging all of this. But from our additional information, you can first see there was the charge repairs and maintenance or repairs of Olumide mother's house, which is not allowable. Add disallowable expenses. Repairs and maintenance. Oludeme's mother's house is not for the business. 45 million. Then the capital allowance, no issue. They told us that interest on capital, interest on loan, and salaries has already been included in the miscellaneous. And that miscellaneous has been deducted before arriving at net profit, so we don't have reduce. We go to the SOP, we check it. Repairs and maintenance, treated rent allowable, interest on loan and overdraft allowable, interest on capital allowable, salary allowable, loss on sale of fixed assets. That's how much? 48,000. Legal expenses for the successful defense of a tax matter is disallowable because any legal expense for tax appeal is not allowable. $105. Then miscellaneous expenses, we filtered all of that. So I think that's what we have. And on the income side, they did not really give us anything on income. So we'll assume all of it are taxing. What's the next thing? Can you hear me?
Yes, I can hear you.
Okay, so what do we have as the total?
My network went off. I was just coming in now. But let me quickly run it. 5,000. That is 198,000.
$198,000.
Yes, sir.
So in the absence of any other thing, this will give us what should be our adjusted profit. and at the same time our accessible profit because they don't have loss.
Any other thing?
And that will give us how much?
That is 1,398,000.
Then we were giving capital allowance in the question. So we'll see less capital allowance.
200 million. 200 million.
So we can relieve it all. So if we relieve 200 from this, what do we have as chargeable profit?
1,198,000.
Sorry, that should be distributable profit.
Okay.
1,198,000.
90,000.
So share of distributable profits.
321.
Oludemi, Suku, and Abdullah. Oludemi will be 3/6 of 1,198,000. Suku will be 2/6 of the same amount. Then Abdullah will be 1/6 of the same amount. What's that?
The first one, 599,000. That is Oludemi.
The first one.
The second one, 399,333.
Okay. What do you say?
399,333.33 for Chuku.
390 what?
399. 1,333.33.
Oludemi and Abdullah.
3. Oludemi 599,000. And the last one, 199,666. 666. Okay.
So we successfully shared the whole money.
On.
So the next thing will now be to calculate their tax liability. So we'll have what? Oludemi, Suku, and Abdullah. So what are the income we have for these people? We have the distributable profits. $599,000,
399.
$399,333,
$337.
$199,667. Then we start taking their income one after the other. The end salaries. What's their salaries? 90,000, 70,000,
And 50,000.
50,000. Okay. After salaries, what else do we have? Interest on loan. $30,000 for Oludemi and 35,000.
Abdullah.
So we have interest on capital. So at 5%, 5% of 900,000 will be what? The class number. What do you say?
45,000.
Okay. The next person,
Yes. The next person, 35,000.
the next person,
37.5.
what do we have after that? So we don't have any other thing aside those ones.
Yes.
Then we can calculate what is the total income for each partner.
For Oludemi, 764,000.
Ah,
Oludemi, 764,000.
uh-huh.
For Chuku, 504,333. 504,333. For Abdullah, 1,192,167.
I don't know what do you do.
1967, 1,922,167.
It cannot be pleased to calculate.
One 799,667 plus 85,000 plus 37,500. That is it, sir. 1,922,167.
This is 19. Okay, it's 199. Uh-huh. I'm
Okay, it's
missing the
19.
one thing here now. So you say it's
Oh,
what?
okay, I'm coming on 199,667 plus 85. That is 322,167.
Okay. So we go to their tax exempt. What is their tax exempt? The only one they have here is that they have life assurance policy. And with you, the life assurance policy, they said they are paying 30, 32, 25.
Mm. 30, 32, 25.
So that will give us how much as gross income. Gross income. What will be the gross income?
Oludemi 734.
Mm-hmm.
Chuku 472.
Triple 476.
472.
Okay.
2333.
I'm coming in. $472.
333.
Mm-hmm.
297 167 for Abdullah.
Then what do we have? We will left consolidated relief allowance.
Sorry. Higher of 200,000 or
So higher of 200,000
1% of gross income.
or 1% of gross
Of
income.
income.
So that's what. So
200,000.
automatically 1% of this figure will be higher than 200,000.
Yes.
Because don't forget these figures are quoted in thousands.
1,000. That is 7340. Mm. 73.
Plus 20% of gross income, what would that give us? Hello?
I'm with you, son. 148, 146, 800
For which of it? For which of it?
for Oludemi.
148.
146, 800. 146, 800.
Mm-hmm.
Chuku 944, 94,466. 466. Let's say
Mm-hmm.
467, Sha. Let's approximate it. Abdullah 459, 433.
What do you call it?
59, 433. Abdullah.
So what's the taxable income?
For Abdullah, sorry. For Oludemi,
Yes.
579.60. 57916.
Mm-hmm.
For Chuku, 373,143. 373,143.
Mm-hmm.
Abdullah, 234,762.
One low. So what do we have? What's that? First 300,000 at 7%.
Next,
Then the next
300,000.
300,000 at 11%. Next 500,000
At 15%.
at 15%. What do we have? Then the next 500,000 at 19%. The next 1.6 million at 21%. Then we will now have what? The next for this one to be 570 what? 576 million
Yeah.
660,000
Yeah.
at 24%. That is, we've taken out the 3.2 million from the total amount.
Yes,
This
I
one
know.
370,000, no, 369,000, 943,000. Then next what? 231, 562,000 at 24%. Yeah, please give me those figures.
For the first one, for Oludemi,
Oh yeah, oh,
138,
uh-huh,
398,
uh-huh.
400.
0.40.
Yes, 4.40.
The second one.
The second one, 88,786.
68.
88, 88,786. 786, 320. 320.
Uh-huh.
The last one, 55, 574, 880.
55, 574,
880.
0.88. Give me the total for each of them. Just add 560 to that figure you have. What do you have? 550, 560 is the summation of every other thing aside that last one. So what do you have if you add 560 to it? 55574.88 plus 560. Oh yeah, oh. Hello, are we good? Hello? Hello, can you hear me? Hello? Hello, can you hear me? You are muted if you are talking. Oh. Hello?
Hello, sir. Hello. Okay, stable. Drop question. Hello, sir.
Mr. Olatunji,
Yes, sir.
I've been waiting for you to join back since now.
I've joined a very long time. I've been saying hello, sir. Hello, sir. I did not hear any response.
Yeah, I did not hear anything. Or did you hear anything? I
Uh,
did not hear anything.
for like 2 minutes now. I've been saying hello, sir. Hello, sir. My network went off before.
Just
I was
read the
just
next question. Let's see if we can still do the next question.
all right. Fadike Femi Kola and Benga have been in partnership as medical practitioners for 8 years. The statement of profit or loss for the year ended 31st December 31st, 2021 is as follows. Gross profit, all those blah blah blah. Additional information. Included in salaries and wages is 1.2 million for each of the partners. Rent and rates comprise of rent paid to partner, Fadike, rates. Additional information number 3, miscellaneous expenses. This includes donations to a church in the hometown of Fadike, allowance paid to the domestic staff of Femi, cost of repairs and maintenance of the residence and each partner totaling office repairs. 4, capital allowances agreed with the revenue was 480,000. Profit are to be shared equally amongst the partners. Fadike and Femi are married with 3 and 2 children respectively. Fadike has a life assurance policy of 960,000 on which she pays 96,000 annually as premium. Fadike maintains her aged parent who is over 64 years. Required for the relevant assessment year, compute the income of the partnership, compute the income tax liability of each of the partners. Hello, sir.
Hello, are you done reading?
Yes, I'm done with the reading, sir.
Okay, we have Fadike, Femi, Kola, and Benga. The Mofinito. Okay. Computation of distributable income of the partnership. For 2022 year of assessment. So what do we have? Net profit.
Net profit.
It is 87,091.
900.
I'm putting the figures in thousands.
Okay.
Then we add disallowable expenses. So information 1 is allowable. 2 is allowable. 3, donation to church is disallowable. That will be 50. Allowance to domestic staff is disallowable because the domestic staff is not working for the company.
Disallowed.
Yes, it is disallowed. Repairs and maintenance of their residence is disallowable. $840 is disallowable. Other office repairs, that one will be allowable. That's what we have in the additional information. We go back up. Salaries and wages allowable, rent and rates allowable, transport and traveling allowable, telephone and telex allowable, motor running expenses,
Allowed.
allowance for doubtful debt,
Miscellaneous expenses.
we stated that allowance for doubtful debt should be 310, abi?
Yes.
Miscellaneous treated professional charges done allowable, audit fee allowable, bank charges and commission allowable, depreciation $1240.6, interest on loan allowable, interest on capital All of which are allowable. So what do we have? Do you have any information about
Total.
I'm with you?
Total 2,680.6.
1,680.
0.6.
Mm-hmm.
$89,772.5.
So distributable profit is what?
88,792.5.
$88.
792.5.
So share of distributable profit. What do we have? Basically,
22,198.125.
what's that?
Share of equity distributable.
What do you call the figure?
22,198.125.
So that will give us 88,792.5.
5.
And that's that. What else do we have?
Tax exempt.
So the next thing will now be to compute the taxable profit. Abi?
Yes. Mhm.
So to compute the tax liability of each partner, for what year of assessment? For 2022 year of assessment, With the what? What are their income?
$22,198.125.
Then we take other income. We have what? Interest on loan. Mm-hmm. You have passage and leave allowance. It is also an income to those partners. Then we have salaries. $1,002. Then we have rental income. Okay. So what's the total income? Okay. We'll have this will be 25,943.125. This will be 24,423.125.
All right.
24,363.125. 24,333.125. That's the total income. Then after having the total income, what do we have next?
Tax exempt.
That's the tax exempt.
Tax exempt.
So what's the tax exempt we have there?
Tax exempt.
So the tax exempt we have is only life assurance premium. And it's only Fadeke that has it, 96.
Okay.
Others doesn't have.
96,000.
So what will be the gross income?
Gross income is 25,827. 25,827.125.
Okay. Then we can
SCRA.
now list consolidated relief allowance. And consolidated relief allowance will be what?
Higher of
Higher of 200,000
or 1% of
or
gross
1%
of gross income.
of gross income, which obviously 1% is higher here.
Mm-hmm.
So what will be the 1%? 258.271, abi?
Yes.
244.231. 243.631. Then 243.331. Then plus 20% of gross income. What's 20% of gross income?
That is
That is what?
516 5.425.
5
165.425.
16 or what is that? Can you please give me properly so I can understand what I'm writing?
5165 let me recompute again. I've taken it with 0.125. That is 5165.425.
Okay. 5165.
6.4.
Huh? Is that it?
Yes. Point two.
I don't understand you. 5165.465. Abi?
Yes.
And that's what I've written now.
Yes. You're correct. The next one.
I'm with you.
Okay. The next one, 4884. 4884.625. 4884.625.
Chargeable income.
The first one, 20403. The first one, 20403.
2403.389.
389.
Sorry, I was wrong. Really missed it for someone else. Sorry.
Next one, 19294. 19294.
19294.
Yes. 0.269.
0.269. We can now calculate the tax liability.
Stand up.
One.
It's you.
Pastor Xiao now. It's funny, how long? Pastor Xiao.
I really underestimated you. Underestimated you. Sit through.
Okay.
One.
Don't think they
So we will now have next one for the first one. 17,203,389. at 24%. Then for the second one, next 16,094,269 at 24%. The next one will have what? 16,046,869 at 24%. And the next one will have 16,023,169 at 24%. Figure
The first one, 41288.
4128
813. 813.
I'm
0.3.
coming now.
Okay.
So it should be 4128.813. Just add 560 to that figure.
412.
That's the tax payable.
4688813. Okay. Three, eight, six, one. 4422625. 625.
It's their wedding night. What do you think they'll do?
I'm with you.
Okay. 3812. The last one, 3854. 3845.
I'm coming now.
Okay.
I'm coming, please.
It's okay.
Step now. Taxi is very. Give up. Divorce is still possible. I didn't cherish her these 3 years. Can wait 3 more. Even 10. I don't think anybody can get her. What about second miss? Going for that.
Okay, number next.
3845.
3845. Mm-hmm.
0.561.
So add 560 to it. What do we have?
38461.
Are you sure? You're adding 560 to it, oh.
The 4405.4861. 4405.56.
Oh, sorry.
561. 561.
So that is that about that. Can we still do another question, or we should call it a night?
If there's another one, let's do it.
Young Master Chief. Young Master Chief. Just right.
Sir,
I'm with you.
can I do that one as an assignment and send to you?
The last question, the third question in that material I use now, you can take
Okay.
that as assignment. But this is another question.
It's okay.
We can read. Even me, I want to sleep. I'm just managing myself.
Okay. Sorry. Tosin, Sarah, and Miriam are partners in a firm of chartered accountants, which for years have been making up accounts to June each year. The following data is extracted from the firm's book in respect of the year ended 30th June 2006. Net profit for the year and all those things. Now, I want to go to the additional information.
Those are the additional information.
Okay, yes. So, Tosin received 270,000 as interest on loan to the firm. 2. Each of partners is entitled to salary as follows: Tosin 1.2, Sarah 900, Miriam 1 million. Partners' capital contributions attract 5% interest per annum payable on monthly basis. The capital is as stated below. Tosin, Sarah, Miriam. Help me scroll up. So. The profit sharing ratio was agreed as Tosin 4, Sarah 3, Miriam 3. Miriam ceased to be partner on 31st December 2005. Chika and Linda were admitted into partnership on 1st January 2006, each being placed on salary of 800,000 per annum. Only Chika was able to contribute capital of 1 million. Linda was only admitted to use his expertise to the firm. The profit sharing ratio after the admission changed to Tosin 5, Sarah 4, Chika 4, and Linda 2. They are required to compute the assessable income and tax liability of each partners, given that none of the partners are married or has dependent relatives.
So this is just another question that is looking at when there is a change in partnership structure during the year. You know, for a normal accounting, when there is a change in partnership structure, what do? We will have to separate the profit made by the old partner and the profit made by the new partner to be separated. So the same thing here, we have to split what Tosin Sarah and Mariam made from what Tosin Sarah. So we have to separate it. But how do we go about it? We first say Tosin Sarah
Those people before who bully you,
Mariam
any of them,
Linda
and you give me another
and
chance.
Chika.
Stop agreeing yourself.
So first thing first, computation
Give me another chance. Hang tag,
of
please.
distributable income for the year ended
Skill that you want.
30 June 2006.
Won't give up.
Net profit 4.2 million. Add disallowable expenses. Disallowable expenses will be depreciation.
Sure.
How much? 140,000. And aside that, the administrative expense is allowable. That's what. So, with less non-taxable income, profit on sale of fixed assets. $150,000. Adjusted profits.
Challenge from feeling insecure.
Adjusted profit will be what? 4,190,000. Then we can now add balancing charge. 380,000 less balancing allowance 420,000 capital allowance 1.2 million. So that will give us 1,520,000. What do we have as
1 million,
1,620,000?
1,620,000.
Huh?
It's 1,620,000, sir.
1,620,000.
Yes, 420 plus 1.250. I mean, one
Oh,
point.
fixed.
Two million 950.
Huh?
2,950,000.
2,950,000. So what we now have is share of profit. Share of distributable profit one. Tosin, Sarah, Mariam. 433 is their profit sharing ratio, right?
Yes, that is 4/10.
So the first thing we'll do is, let's do it this way. The first people that were in the business were in it as from 1 July 2005, abi, up
Yes.
to 31 December 2005, when Mariam ceased to be a partner, right? You know, if they are ending their account 30th June 2006, it must have commenced 1 July 2005. Is that not it?
Yes.
And if someone retired in 31 December 2005, that's one period. And that's 6 months. So that will be 6/12 multiplied by 2,950,000. And that will give us how much? That will give us how much?
1,475,000.
So that is what the three of them will be making. Because that was what they made before the issue. The share of distributable profit too. That will be 1/1/2006 to 30 June 2006. And that is also 6/12 multiplied by 2,950,000. Figure.
1,475,000.
So we have what? For that one, we have Tosin,
Sarah
Sarah,
and Chika.
Chika, and Linda. What's their profit sharing? 5,442. So this will be 5/15 multiplied by 1,475,000. 4/15.
Two over 15.
Figures.
For the first one, Toasting 590.
5
90.
round figure. The second one,
Yes. 442,500. Same thing for the third one. For the second one, Tosin 491,667.
491,667. Mm-hmm.
Second one, 393,333.
Just divide it by 2. What do you have?
196,667.
So you can add all of it together. I should still give you the 1,475,000.
So,
So we are done with the sharing. The next thing is now to compute tax liability. So we have Tosin,
Sarah,
Sarah, Mariam, Chika,
Linda,
and Linda. So we have what?
5.
Before we even go to their income. So now, because Tosin and Sarah are already in the business and they are not changing, they are still remaining with the business, we'll assess them as if they are an existing business, meaning they will be assessed on preceding year basis. That will be what? 2007 year of assessment. Abi? With the
Okay.
basis period being what? 1/7 2005 to 30/6/2006. But since Miriam is retiring in December 2005, the law of cessation will apply, and it applies that they only have 3 months from their date of cessation to pay their taxes. So that means what? We'll have this. 3 months will lapse in 2006. So it should still last. The year of assessment should be 2006, and the basis period will be from 1 July 2005 to 31 December 2005. For Chika and Linda, they are just commencing, so we'll use commencement tool. The commencement tool is that you assess the this thing. The commencement tool is that we start charging them the year succeeding the year they make their first account. So that's why we have it this way. And the basis period will be 1/1/2006 to 30 June 2006. So what do we have then? Income. Distributable profits. Distributable profits, we have 1 and we have 2. For 1, it is what? 590,442, have it? 590 for this person, 442,500 for this person, 442,500 for this person. $491,667, $393,333. This one has retired, so he did not get anything. $393,333. Then 196, my children. 196.
667.
667. And we can start bringing other income. We are told that what? There was a passage cost, leave allowance. How much? 200,000 to Sarah. Okay. Interest on loan. this, I'll gross it up because they did not give me what they put in their account. Rather, they gave me what they pay.
Okay.
So we'll say interest on loan 270,000 divided by 0.95. So that's that. Then salary. We have what? 1.2 million salary per annum. For Sarah, 900,000. But for Miriam, since she was only part of the business for half of the period, she would only get half of the salary also, which is 500,000. Then the next one. Okay, so that's salary. What else do we have? Oh, they said something about salary for the new people.
Mm.
They were placed on salary of 800,000 per annum. So that means since they only did half, they will get 400.
1,000.
Abi?
Yes.
Then we move to the next thing. What else do we have after interest on capital?
Interest on capital. Yes.
Okay, interest on capital will be what? 5% of this should be what? 100,000, Abi?
5% of 1 million.
Yes. 5% of 2 million.
Yes, 100,000.
And this should be 90,000. 5% of 1.8 million. But for Miriam, since she was only part of the business for half of the year, and we believe when she's going, she will go with her math, then we will have to do what? So what do we have? 1.5 million times 5% times 6 divided by 12. What do we have? What do we have?
1.5 million times 15%.
Times 5%.
5%. 75,000.
That's 37,500. Then Chika contributed 1 million salary. 5% of the 1 million.
50,000.
50,000. Is it 50 or 25? 5% of
50,000.
it shouldn't be, it should be 25. You know, they will only pay Chika for half of the year. He only contributed Qatar for half of the year.
Okay.
And
Yes,
Linda did not even contribute anything. Aside that, what else do we have? I think that is all we have. So what's their total income?
The first one,
Mm-hmm.
2,681,667.
Mm-hmm.
Second one, 2,025,833. 2025, 833.
So that's their total income.
That's tax exempt.
They don't have any tax exempt.
They do
It
not
will
have
just
any
go to the total income will still remain as our gross income.
income.
So we can go straight to
Yeah.
CRA. So I think 200,000 will definitely be greater in this case
Yes.
because all of it are within the range of 1 million, 2 million.
Million.
Then plus 20% of gross income. What is 20% of gross income?
536.
First one, 536.
Yeah, 333.4.
Mm-hmm.
The next one, 405,166. 167. 405,167. The next, 196,000. The next, 163,667.
What do you call it?
163,667.
That last one.
Yes.
I mean, give me the figure for the last one.
Okay, 119,333.
So what is the chargeable profit? Hello. Hello. Okay, so tax liability will just be for this one that is having less than 300,000. We'll just say 277,334 at 7%. Nineteen four one three. And because others have above 300,000, we can do first 300,000 at 7%. That will be 21,000. This last two again doesn't have up to the next 300,000. So we just say next 154,667 at 11%. Then the next 284,000 at 11%. Then the next 300,000 at 11%. The next 500,000 at 15%. Having done that, that's 1.1 million. So this next one will just be next 320,000 6 cents. The next 500,000 at 19%. The next what? 1.6 million minus this, that will be 345,334 at 21%. 72,520. So we can now less that withholding tax on interest. And that will give us how much? 30,000. So tax payable will be 266,520. $60,927. $31,240. That will be $52,240. One number two. There's no one number two for boy. 17,013. That will be 13,013. Why this should be 19,413. No withholding tax on all of this. So that is that. That is that on that. We'll meet in the next class. Thank you very much for your time.